Fine. Everybody, we were actually discussing the topic called independent branch. In the branch, we had two classification. Primary classification was the dependent branch and independent branch. We have solved all the issues, all the concepts from dependent branches. We have just started the topic independent branch. The unique aspect of independent branch is that the branch maintain their own accounts. So there is no special issues in finding out the profit or loss of the branch. It's that branch prepare the complete accounts right from the journal till the final accounts. Similarly, head office will have journal to final accounts for their transaction. Compiling the information of head office and branch and preparing business as a whole, financial statement, is what we have through the topic independent branch. So naturally the topic is actually final accounts. Final accounts of branch, final accounts of head office, and the entire financial statements of the business as a whole, right? Okay. I also told you that some uniqueness exists between transaction that occurs between head office and branch. There are certain transaction that occurs between head office and branch. So what are those unique transactions? How to make accounting entry for such transaction is what we discussed in the previous class. Once again recalling that the basic transaction between head office and branch is goods sent, goods returns, cash sent, cash remittance. And then some of the branch customers directly paying cash to head office. Some of the branch customers also returning goods to the head office. Like that we have 6 basic transactions. Now it's very simple. As a person in this transaction, either head office receives something or head office gives something. If you take the role of a giver, then the giver should see to whom the thing is given. Understood? So from the viewpoint of giver, receiver is very important. From the viewpoint of receiver, what they get is important rather than giver. So any entry for that matter is very, very simple. It is always debit the receiver, credit what goes up, giver. From the viewpoint of giver, correct? From the viewpoint of receiver, debit what comes in, credit the giver. So this concept, how we can apply it? Head office sending goods to the branch. Branch to goods. What goods? Goods sent to the branch. Branch is receiving goods. Goods to head office. Which goods? Goods received from head office to head office. Branch is giving cash. So branch is giving na. Head office to cash. Head office receiving cash. Cash. Branch. Cash to branch. Simple accounting entries. Everybody? Branch customers directly returning goods to head office. In the books of head office, they will account as if the goods are received from branch. From the viewpoint of branch, these goods are returned by the customers to the branch. Shankar? These goods are returned by the customers to the branch, and then by the customers to the branch, and branch is sending the goods to the head office. Understood? My dear friend, here. Okay. Okay, there. But certainly not like this. Fine. So we were making accounting entry that way. Similarly, branch customers giving cash to head office. From the viewpoint of head office, cash to branch. From the viewpoint of branch, two things happen, but you can combine that and entry will be head office to cash. That was the initial. Head office to debtors. See, head office to debtors is the entry. Understood? Okay. Just testing you. Listen. Okay, good. Now head office and branch accounts relating to fixed assets. Even though the branch is independent, even though their accounts are kept by them only, but sometimes their fixed assets are kept by head office. Their fixed assets are kept by head office. Entry becomes such a simple exercise, sir. So this way, head office will record branch fixed asset. If they are buying, credit cash. If an existing asset transfer, credit fixed asset. They are buying, na credit them. Charging depreciation is debit them and credit fixed asset. That's all. I won't book expense. In the books of branch, they won't make entry if it is purchased by. They won't make entry if it is existing fixed asset. But they do make entry if they have purchased. Cash is going out. But they won't debit fixed asset. Even though they are buying fixed asset, they won't debit fixed asset because they are not maintaining that account. So thereby they will debit head office. Like that we made entry. But I will book the expense, my expense. Depreciation debit to head office. Like that we make entry. Understood? Then we discussed branch fixed asset is maintained by branch. In that case, what are the entries? Fixed asset purchased by head office. Entry is branch to cash. In the books of branch, fixed asset to head office. Existing fixed asset transferred. Branch to fixed asset. Now listen carefully, friends. These entries are made by head office. Even though accounts are maintained by, because the head office is a party to the transaction. Head office paying cash or head office fixed asset going out. Thereby we make entry. Debiting whom? Branch. Branch will make the entry because they are recording the asset. So fixed asset, they helped us in buying that to head office. They are transferring their asset, still head office. Correct? But if we are buying normal purchase and fixed asset to cash, our depreciation to fixed asset. Understood? Like that we were discussing various accounting entries. Everybody? Pakka? By this time. Okay, so you should have noticed one thing, sir. Out of all these entry, whenever head office debit branch, branch will credit head office. Whenever head office credit branch, branch will debit head office. For all the entries you can see that. So one thing that you can see is that the balance shown in the branch account and the balance shown in the head office account should represent same. Correct? In the books of head office, what is shown as branch account? What is shown as? Will generally show debit balance. Will generally show? That is nothing but the amount invested by the head office in the branch. Is that clear to you, friends? That is the money totally receivable from branch. Understood? And that will exactly matches with the net asset of the branch. It will matches with the assets minus. That will exactly equal to what? Branch. Understood? Please respond. Because after this, realizing all assets, paying all liabilities of the branch, whatever left in the branch belongs to whom? That is what in our book shown as branch account. Respond. If they make profit, that belongs to us. Everybody. In the books of branch, there is an account called head office account. No. That is actually the money payable to head office. After payment of liability, whatever left in the business is fully payable to head office. Even whatever profit earned by the branch will be added to head office account only. Understood, Appa? So this relationship you should always be knowing. Anyway, to substantiate about the relationship, we will discuss later some inputs. Now presently we like to take up the next concept still in journal entry. Shall we, sir? Yes, sir. We like to discuss inter-branch transaction. Inter-branch transaction. One branch transferring goods to the another branch, or remitting cash, giving checks, or drawing bills, transferring asset, like that some transaction happening between two branches. Everybody? Now, how it should be accounted means, it should be accounted by head office as if the transactions between head office and branch. No, it is not like that. In the books of branch, it will be accounted as if the transaction is happening between branch and head office. The branch will account the transaction as if it is happening between branch and head office. It is not between one branch and another branch. Shall we? Imagine, see the head office at Mumbai. Branch is at, say, Chennai, and another branch Hyderabad. We got two branches. Chennai, Hyderabad. Everybody. Or, to be even more clear, let me scrap Chennai and Hyderabad branch. The head office at Mumbai. Branch 1 is at Nungambakam, other one is at Mandaveli. So that way we have two branches, correct? Head office Mumbai, and there is a branch at Nungambakam, another branch at Mandaveli. Now please settle down. Mandaveli, we have two branches. Ayyo. Please listen. Friends, please stop talking. One branch is at Nungambakam and another branch is at Mandaveli. Now listen carefully. Nungambakam branch transferring goods to Mandaveli branch. Mandaveli branch. Please listen. Head office will account as debit the receiving branch, credit the supplying branch. It will never account what is getting transferred. Debit the receiver, credit the giver in the books of. Branch will account as if the transaction is happening between the branch and head office. In other words, Nungambakam branch transferring goods to Mandaveli branch will be accounted as if Nungambakam branch is returning goods to head office. And Mandaveli branch will account the receipt of goods as if it is received from head office. Everybody. Now, what is their head office will do? Debit Mandaveli, credit Nungambakam. Everybody. Branch A transferring goods to branch B. Branch B to branch A. Understood? Branch A transferring goods to branch B. Entry. B to branch A. Branch X receiving goods from branch Y. X to branch Y. Debit the receiver. Understood? Branch C transferring goods to branch D. D to C. So, head office book. Such a simple entry. What is that, sir? Debit the receiver, credit the giver. Everybody. Branch G transferring cash to H. H to G. Branch H to branch G. Are you following up? Branch J draws a bill on branch K. Branch J draws a bill on branch K. Now, first of all, you tell me you are discussing entry in whose books? Head office books, not in branch. The branch will account as if the transaction is happening between head office. So, presently we are discussing in the books of. According to head office, there is only a single rule. Debit the, credit the. Understood, Abba? So, what is the entry in the books of head office? J draws a bill on K. J to K or K to J? Who is drawing the bill? Who is accepting the bill? Now, what should be the entry, friends? J to K only. Because The bill is drawn, and who will have the bill? So it is as good as J is getting a check from K, or as good as getting cash from K. Are you following? So ultimately, who is having the bill? So he got, the J only got the bill. Are you following? So thereby entry will be what, pa? J to K. Understood? Respond. Q accepted a bill drawn by P. Q accepted a bill. Entry will be what, pa? P. Debit the receiver of the bill. Who got the bill? Q accepted the bill and giving back to P na. So who will have the bill? P is having the bill. So P account debit. Debit the receiver. So whether it is cash, check, or draft, or bills, or stock, or anything, it is always debit the receiver, credit the giver in the books of. From the viewpoint of branch, never they bring another branch in their books. They will always account. They will never have another branch in their accounts. Understood? From their viewpoint is always respond. Everybody. So inter-branch transaction, debit the receiving branch, credit the supplying branch or giving branch. Not only for goods, my dear friends, goods, cash, or any transaction that takes place between head office and branch, this is the entry. Is that clear to you? I mean branch to branch, not head office to branch. Transactions between one branch to another branch. New sound? Okay. Now, in the books of branch, transaction will be accounted as if it is made with head office. A transaction will be accounted as if it is made with head office. Now listen friends, if I have some around 10 to 12 branches, and between these branches daily or maybe on a weekly basis, several transactions, exchanges happening. Understood? So in that case, they will not make entries for each and every transaction. I repeat friends, if there are so many branches, or even though there are only few branches like 2-3 branches, but between 2-3 branches every day certain transaction is happening, then it will be very cumbersome job to record all the transaction. Respond. In that case, what we will do is that we will keep a register, friends. We will keep a, and for each branch we will have a debit column and credit column. Debit column and we will just mention the transaction and we will write that amount in the respective column. Debit column, and for the receiver we will debit. For the supplier it will be credited. Respond part. Without any journal entry. And the net effect either on a weekly basis or on a monthly basis will be brought into the accounts. Now the register that we make is not accounts. It is just a memorandum book. It's a, and finally they will make accounting entry. They will make accounting entry only on a periodical basis. Ram Prakash will make entry only on a periodical basis. Could you appreciate that? Everybody, so please understand that. So whenever there is so many transactions happening between branches, journal entry will not be made for transaction to transaction. It will be made only on a summary basis. So what do? We will make the mention the transaction. We will debit credit the appropriate branches. Correct? Based on the receiving and giving. Could you appreciate that? And then we will take the net total. debit, debit, credit, credit, debit, debit, like that. So many items will be there, and find out the net total and make one single entry for a week or maybe a month. So that we need not make journal entry, that which is so difficult task every day. Correct, Appa? Please respond. So based on that area, this practical relevance, based on that area, many times a question used to come in the examination. Now, so one thing I told you in the books of head office, we will have branch account showing dash balance in the books of head office. The calculator and all something is happening. Letter writing and all. Okay. Between nearby friends, letter writing going on. I don't know what is that. Listen. So when head office generally will have branch account debit balance, and branch will have head office credit balance. These balance are always expected to be same. Who will prepare the financial statements of the business as a whole, friends? Head office. For which the head office requires information of the branch. Put it in. Very good. So that way, I don't want that. That letter I will read. Now we just find out that head office want the entire information of branch. Head office requires the entire information of branch. So thereby, the branch, after the preparation of trial balance, which will be sent to the head office incorporates the trial balance of the branch in the books of head office. Head office will incorporate the trial balance, incorporating the various incomes, expense, assets, liabilities of branch in the books of head office. Through such incorporation, the branch account in the books of head office gets vanishes. Through that incorporation, the branch account in the books of will vanish. That will not have any balance any longer. Understood? So what happens is that the moment we incorporate the liabilities, assets, income and in the books of head office, the branch account whatever was shown in the books of head office, that will no longer exist. And we are not incorporating the head office account in the books of branch in the books of head office. We are taking only assets and so the moment the incorporation entries are passed by head office, automatically the branch account and head office account is no longer existing. Could you appreciate that? In other words, in the overall financial statements of the business, there is nothing called branch account or head office account. We have assets, liabilities and share capital. Maybe for head office we have receivable from and for branch payable to, but for business as a whole no such receivable or payable. All assets and liabilities are business assets and liabilities, that's all. No receivable, no payable. Understood? So thereby what do we do? Before the head office prepare the overall financial statement, they will incorporate the trial balance of branch. Sometimes the head office will incorporate only the balances of assets, liabilities and profit. In other words, incorporation will take place after the preparation of P&L by the branch. So branch then will have only the net profit, assets, liabilities. Understood? Sometimes it will be before the preparation of P&L, which will have incomes, expense, assets, liabilities. Whether you incorporate before or after, the effect is remaining, because if it is after P&L, incomes and expense was netted off and you are getting net profit. Anyway, that will be incorporated. Understood? So we are discussing about incorporation entries. What entries? Incorporation entries in the books of head office. What are the incorporation entries in the books of head office, friends? Very good, that's nice. What is the entry? Asset account debit to liability account. Asset account debit to liabilities account. Expenses account debit to incomes, as well as branch account was showing what balance, and that will be credited. Automatically that account vanishes and this journal entry will be tallied. Everybody, because it is asset account debit, expenses account debit, to liabilities, to incomes. Suppose the incorporation was made after the P&L, then asset debit, to liability debit, to branch profit, to branch, then to branch account. Automatically that account will vanish. Could you appreciate that? This is the incorporation entry. After incorporating this assets and which will be added to the existing assets and liabilities of head office. It will be added to the existing assets and liabilities of head office, and we will prepare the overall balance sheet, overall P&L account. Is that clear, friends? A simple thing, sir. Actually, we need to add the incomes and expense on a line by line basis. Providing accounting effect for this is that we are incorporating such income and expense in our books. Understood? Survey accounting entry will be assets debit, expense debit, to liabilities, to branch account. Suppose the incorporation is made after P&L. Assets debit, to liability, to branch profit, to branch account. Understood? After incorporation, you will go for preparation of overall financial statements. Shall we proceed, friends? The branch account that is shown in the books of head office and head office account shown in the books of branch. Say, please understand, if there is a trial balance sheet for branch, it will have sundry assets, sundry liability, head office account, net profit. Everybody, please respond, friends. Now, the difference between sundry assets and the sundry liability and net profit is always head office account balance. This should be equal to dash balance in the books of head office. Branch account. The branch account is actually representing the net value of sundry asset minus sundry liability minus net profit. Could you appreciate that? That is why I said the moment you incorporate sundry asset, sundry liability and net profit, the branch account will vanish. Is that clear? For that purpose, this head office account balance in the books of has to be equal to branch account in the books of head office. So before the incorporation, the branch account in the books of head office and head office account in the books of branch. That stick also you are eating, huh? The lollipop he was having. Suddenly I saw that stick also is not there. No, he didn't use his hand and all. Stick. Eating it. Stick is there. Okay. What's our friend's name? Harshal. Okay. The person who makes the noise. Okay. Anyway, listen, friends. We actually discussed the primary transaction between head office and branch. And then we discussed the fixed asset related entries where fixed asset account maintained by head office, fixed asset account maintained by branch. Then we discussed inter-branch transaction. Then we discussing incorporation entries. But before the incorporation, we should ensure that the head office account in the books of branch account in the books of head office has to be, sir, they will be same, sir. Because every time I told you, when head office debit branch credit head office. So naturally, the balance will be same. But sometimes there will be difference. Sometimes there will be, and such difference are arising because of in transit items. Understood? It could be goods in transit, or it could be cash in transit. It could be, or it could also be some accounts made by head office and some transaction not recorded by the branch. Understood? So it could be the same thing what we discussed for a BRS, a timing difference. Understood? We recorded, branch not recorded. Branch recorded, we have not recorded. So why you didn't record? It could be an omission. It could be an, or it could be such a way that I sent the goods, I have recorded. They have not received the goods, they have not recorded. Could you appreciate that? So thereby, there could be a possibility of difference between branch account and head office account on a particular date. This has to be reconciled. Understood? Here what we mean reconciliation is bringing the head office account and branch account to be same. You should make it same. So we like to understand that reconciliation entry. Now what was our discussion, friends? We have to incorporate the assets and branch in the books of, but and we have already learned incorporation entry, but we have to, now we are learning something to be done even before the incorporation. What we should ensure? Please listen, friends. Head office account and branch account should be same before we incorporate. Now it will be normally same. Whatever accounted by head office will be accounted by branch, but may not be at the same time. May not be at the, we send goods, we recorded. They will account only when, maybe in 2-3 days I will record, but on 31st March morning I have sent goods, I have recorded, and 2nd April only they are going to receive. So that time only they will record. Understood? So, but for the preparation of balance sheet, you have to reconcile such entries. Could you appreciate that? So now we are actually discussing reconciliation entries. What entry? Reconciliation entries in the books of head office, in the books of branch. Entry will be goods in transit, cash in transit, or it is called remittance in transit. It is either called cash in transit or remittance in transit to branch account. Everybody respond, pa? In the books of branch, no entry. Reconciliation cannot be made at 2 places, pa. Difference is there. One person recorded, another person. If you are going to make reconciliation also 2 places, now again difference will be there. Are you following? Please understand that reconciliation at one place by making the entry goods in transit, cash in transit, or remittance in transit to branch. Okay. The reconciliation can be made only in head office, sir? No. It can be made in head office or in branch. But one place. Either in or in branch. So if reconciliation is made in the books of, no entry in the books of branch. Understood? But if entry is made in the books of branch, then no entry in the books of head office. What is entry here? It is goods in transit, remittance in transit to head office. It is in the books of branch, na? But this is the entry. How many of you are having still doubt about these entries? Oh, many. You're not trusting me. Okay, fine. Very good. Let me prove this entry. Everybody? In either books, entry remains is what I would like to prove now. To reconcile whether you make entry in the books of head office or entry in the books of branch, it remains is what I would like to prove. Everybody? Okay, let me prove. Friends, please listen. Head office, branch. Friends, please stop talking. My dear friend, turn here. Listen. In the books of head office, what account ba? Branch. Will show generally what balance? Say it is showing some balance, say 60,000. Branch books. 60,000. Friends, we are sending goods worth rupees 30,000. We are sending worth rupees to branch. We have already sent, which was not received by branch. This is the fact. Let us make the original entry. Branch. This is not reconciliation entry, friends. Original recording entry. I am now only sending goods. Branch to goods sent to branch. 30,000. I have not received the goods. Everybody? Because of this, what is the branch account balance? 90,000. Head office account shows credit of 60,000. No entry is made because goods not received. Now, today is the date we are going to prepare final accounts. Head office wants to incorporate the various assets in the books of. Further, these two balance should be same. But there is difference. This difference is because of goods in transit to the extent of that is also known. Now, only question is, how do you make reconciliation entry? Where do you make reconciliation entry? Reconciliation entry can be made either in head office or in branch. Anywhere you make. Understood, Appa? You can make reconciliation either in the books of or in the books of branch. Shall we proceed? That is based on the policy accounting principles followed by that organization. Understood? Now listen. I am going to prove what? It is either made in or made in. Entry remains is what I would like to prove. Let me first decide that the reconciliation entry to be made by head office. If it is made by head office, reconciliation entry, my dear friends, what entry I told you? Goods in transit to branch account. 30,000, 30,000. Correct? Everybody? In that case, what happens? Revised branch account after reconciliation entry will be showing a debit of 90. I have credited 30, thereby showing a debit of 60,000. No reconciliation entry made in the books of. So head office account still continue to show balance of, hence reconciled. Everybody? Respond pa. Or another reconciliation entry is, said don't do reconciliation here. Do reconciliation in branch. I told you same entry, not ulta entry. You are thinking goods in transit to branch, na? Sir, you told that entry because you were actually having the influence of what I told you before. Whenever head office credit, branch will debit. Based on that you were telling the entry. But actually it is not the entry to be simultaneously made by head office and either by or by head office. Understood? Or branch. Understood? Now, it is reconciled, friends. Everybody, suppose instead of this reconciliation, instead of this, you are reconciling in the books of branch, goods in transit to head office. You are crediting head office. Now the 60 will become 90,000. And already in the books of branch, 90,000, 90,000, 90,000. Hence reconciled. Are you following? So thereby please understand that reconciliation entry is made either in the books of or in the books of, but entry remains the same. What is entry? Goods in transit, cash in transit, remittance in transit to head office, to branch if it is made by, to head office account if it is made by branch. That's all. Understood? It is not the ulta entries. Is that clear to you, friends? Now, where reconciliation entry to be made will be given in the question. They will tell reconcile in the books of head office, reconcile in the books of branch. Like that they may provide the entries. Correct? But there are questions where nothing is mentioned also. Simply giving reason. This is why reason. Cash, branch have remitted cash. So far not received by head office. Or head office have sent goods. So far not received by. In the absence of information, the conventional reconciliation is like this, sir. Reconciliation will be made at the receiver's point. Reconciliation to be made at receiver's point. Which means, suppose the difference is because of head office sending goods to. The difference is because of head office sending goods to branch. So already head office have accounted as if goods has been sent. So far no entry has been made by the branch because they have not. Now you reconcile only in the books of branch, making an entry goods in transit to head office. Are you following? Everybody. So that is how. Suppose branch have remitted cash to. That entry you make at head office. So if no other information given, then reconciliation is made at receiver's point. But if the question specifically tells you that reconcile at head office, then you make only at head office, even though it was good sent by head office to branch. You make reconciliation only at the head office place. Understood? What is the final conclusion, sir? We have to incorporate the assets and of in the books of, for what purpose? For overall financial statements, we have to incorporate assets and liabilities. Incorporation entry. Assets debit. To liabilities. To profit. To branch. If it is after the P&L. Understood? But normally, friends, it is not single incorporation entry. We transfer assets separately, liabilities separately, profit separately. Suppose it is income and expense, income separately, expense separately. So can I make that entry? Assets alone transferred. Assets to branch, liabilities. Branch to liability, expense. Expense to branch, income. Branch to income, that's all. Are you following? So normally we make separate incorporation entry for assets liability. Like amalgamation topic, you should not discuss this. Assets taken over at agreed value, liabilities taken over agreed value, business purchase. Difference goodwill or capital, so don't make entry. Understood? So here let us incorporate those assets and liability separately. Before the incorporation, reconciliation to be ensured. Correct? So you should ensure the balance shown in the head office account and branch account should be same. Where you should reconcile as per the instruction given in the question. No instruction. Receiver's point. This is the conclusion. Understood? Yes, sir. Then some unique transactions and all can be given in relation to independent branch. For example, friends, listen. Like we discussed in dependent branch only, head office incurred expenses of the branch directly paid by head office. To be specific, expense of the branch directly paid by head office. Entry in the books of head office. Credit cash, but don't debit expenses. Branch, so branch to cash. In the books of branch, it is our expenses. Expenses debit, credit head office. expenses of the branch directly paid by head office. In that case, what is the entry? Branch to cash. In the books of branch, expenses to head office. Next. One branch paid the expenses of another branch. Understand that? One branch paid the expenses of another branch. In the books of head office. In the books of head office. What is the entry? It is the branch which have paid should be credited. And whose expense incurred as if it is they received debit that particular branch. Debit that branch which have whose expense incurred, credit the supplying branch. Branch books. As if it is paid by head office. The branch which have paid that entry what? Head office to cash. The branch which got the benefits. No cash. Expenses to head office. That's very good. Understood, friends? Branch paid the expenses of head office. Branch paid the expenses of head office. In the books of head office. Expenses to branch. That's very good. Now you are applying yourself. Because it is expenses of debit. But have we paid? Who paid? So expenses to branch. In the books of branch, they are paid cash. Credit cash. Head office to cash. That's very good. These are the real examination question entries that has come in the previous examination. People could not. They immediately now, after seeing several number of problems, they feel like this is as if in a big question. And because of their mindset only, they have not properly read the question. Are you following? Simple accounting entries only came. Everybody? Anyway, so you are understanding the entries, my dear friends? Pakka?